Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And I feel like this week has indeed been a jam-packed one. Of course, I would happen to be traveling during that week, but we will try and make up for it in this video. So there's been a lot that we've covered this week thus far. We've made sure to get a daily market update out as we do every single day at 1 p.m. UK time, so make sure you are a subscriber. But just within the past day or 24 hours, there's been a lot take place. We see Goldman Sachs actually now deciding that they are, by the end of this year, going to launch a digital asset platform. Now, isn't that just a green light? And it's very interesting that yesterday we had some pushback on SARB 121, which was vetoed by Biden in regards to bank custodian around digital assets. That was actually then voted against by the House. And it's very interesting how we see the kind of favorite banks for the United States, the banking international cartel or the international banking cartel. Essentially, not only have they always been enabled by the Fed, because they're very much a part of it, but actually the SEC has very much acted as a kind of friend to them. And even in regards to digital assets, which is what, and the custodian banks of digital assets, which is what SARB 121 was all about, the SEC essentially said, you can't custody digital assets as a bank. It's not allowed. And yet, so really what they've done is stalled this industry, which is what I think Gary Gensler was putting there to do in the first place. And now, as they're no longer being able to do that, and they're getting ready to sort of open the floodgates, so to speak, which is why we're going to have the biggest crypto bull market in history, you now see the likes of JP Morgan, BlackRock, all of these people, and of course Goldman Sachs entering the arena, having kept the little banks, the little independent banks out, because what they want is a centralized communist-style republic. So we're going to be talking about that news. That's obviously huge news. Talking about SARB, we're going to be listening to a number of clips. We'll also be talking about what's taking place today in regards to CPI. CPI, in my opinion, is going to continue to come down. Inflation isn't going to be a problem like everybody thought it was. Ultimately, rates will come down. That's going to drive the Dixie down, which is going to see risk do well and increase liquidity. We had GDP for the UK today, which we'll talk about quickly. Lots of people accusing Keir Starmer of being responsible for that, but how on earth he can be, considering he was only voted in a few days ago, is beyond me. And then we've got some news from the CFTC chair that says about 60 to 70% or 70 to 80% of cryptos are non-security. So we have a lot to get into. As always, guys, when do we not? Let's start things off with a little bit of the boring macro stuff just to get things out the way. And let's dive into that. So today is, of course, a significant day. You have UK or US CPI, you had UK GDP. So the GDP numbers for the UK came out at 0.4. This is 0.2 ahead of expectation. I think, just to cover this very quickly, and Michael Brown reports on this, that this is to do with bank borrowing. And this is another record high. We're seeing a lot of bank borrowing on the short term, so they don't want to take out that long-term debt. There doesn't really seem to be a bid for long-term debt. I think that's going to come back as we start to see yields sort of fold. You're going to see I think money flowing out of money market funds. Also, BlackRock, there was news, went from $100 million on their build fund to 400 or 500 million. I did interview, and this is a little side note, I did interview Archax's CEO, and he was saying it's very interesting how you could actually potentially, and this is something they're looking at, use money markets as cash. So the actual tokenized funds as actual cash instead of dollars, which means that you're essentially getting a return on your cash just for having. It's a very interesting concept and idea, and I think if you look at the national debt that's out there, there's going to be an element of distributed ledgers that actually solve or at least mask that problem for a period of time. And the Great Reset, which is coming, I think people haven't got quite right. But we had UK GDP. Quite a good one. Obviously, today is CPI. If you didn't watch yesterday's video, go and do so. We've got unemployment data that's important to watch. Correlation between unemployment is when unemployment goes up, markets typically go down, or when unemployment's at a high, markets are at low, vice versa. CPI is going to be the big one. Obviously, what's been driving the Fed funds, what's been driving yields, it's inflation, it's data, it's economic data. As we get better data, certainly from an inflationary point of view, yields will start to price in cuts, which means cuts will follow. And that's ultimately going to drive the Dixie lower, which is going to see risk do well. And generally, we've been extremely right on that. Crypto has been a little bit of an annoyance. Certainly, when you look at larger caps, it's very much followed the plan as we've set out for it. But smaller altcoins, they're still, being accumulated and kind of had that first move of summer, if you will. So that's the kind of economic data stuff that's coming out today. Yesterday, we had insane news. This is Goldman Sachs to launch 3 tokenization projects by the end of the year, says digital asset chief. as it peers in traditional finance push deeper into crypto, including BlackRock's Bitcoin ETF and Fidelity's trading platform. Goldman Sachs is preparing to make a move of its own. This comes as the 150-year-old banking behemoth is seeing a major uptick in interest for clients. Digital asset global head Matthew McDermott told Fortune. So you are going to see the likes of Goldman Sachs offer cryptocurrencies. You'll have JP Morgan. Of course, you've got Solomon, who's the head or CEO of Goldman Sachs. JP Morgan, who have typically been quite against it, but that's because they serve the international banking cartel. In fact, they're a big one. JP Morgan, Morgan was fundamental in the foundations of the Federal Reserve. And they give you a good and a bad guy. They had the Aldrich Bill, which was nasty Wall Street. Let's give it to the people with the Federal Reserve. And then it was just the same people doing it. But it's very interesting how we're seeing Goldman Sachs now enter the arena. And it's also very interesting how Gary Gensler has stifled this industry. We've always said this, only so that his special interest, the people that back him and have likely put him in that power, the international banking cartel, can essentially get ready to capitalize off us and take the lion's share of it like they do with everything. And this does beg kind of more broader questions, I believe. What I want to do now is dive over to some congressional news in regards to SARB 121, which essentially was a legislation that the SEC had put in place to stop banks from custodying crypto assets, which is insanity. It's interesting how BlackRock can now do that. We've got news that Goldman Sachs are now preparing to do that. And now they're going to go, oh, okay, well, we'll allow it now that the big guys have kind of positioned themselves to do exactly that. And we've seen a lot of crypto get accumulated, despite the German government selling. They've nearly halved their stockpile. We've seen loads of crypto get accumulated through the ETFs, and we're even seeing ETPs. We'll talk a little bit about that towards the end of the project. Exchange-traded products when it comes to the altcoin market. It's one major reason to be bullish on the altcoin market. That alt season is coming, ladies and gentlemen. Just hang in there. But let's listen to Rep. Mike Flood talking about, after passing the House and Senate with bipartisan support, President Biden's veto 109, a measure that would have repealed the U.S. Securities and Exchange Commission Staff Accounting Bulletin 121. Today, my colleagues have the opportunity to override the president's mistake, and they did actually do this. So we'll listen to Mike Flood's speech. We'll listen to the actual vote to override President Biden's veto, and it did pass, I believe. And then we'll look at some comments from the CFTC. So let's go ahead and dive into.
Thank you, Mr. Speaker, Mr. Chairman. I want to thank the chairman for his leadership on this issue. I feel like we should start with the definition of custody. It's that basic, folks. Banks hold others' assets in custody, and they don't put them on their balance sheet. This is an example of Mr. Gensler at the SEC using a staff accounting bulletin to keep banks out of digital asset custody. This is the first time this resolution went through Congress. It received, as the chairman said, bipartisan support from both the House and the Senate, including Majority Leader Schumer. Think about that. Majority Leader Schumer broke with his own party, with his own party's president on this issue. The reason for that support, and it's really simple, the SEC got its hand caught in the cookie jar. They overstepped in a blatant way that runs contrary to its obligation to protect investors. What is the SEC doing in banking policy? Somebody ask the Federal Reserve, ask the OCC, ask the Treasury Department. Do they think this is right? Look at the testimony in front of the Financial Services Committee. SARB 121 is not a political issue. It's simply a bad regulation. No matter what your feelings are on cryptocurrency, the SEC shouldn't be writing bank custody rules, and they definitely shouldn't be overstepping their authority to do it. And now on this floor today, we hear from the ranking member that there's some private deal with a couple of banks. And to the chairman's point, that's not good public policy. That's amateur hour. That's trying to avoid the embarrassment of having the House of Representatives vote like it did on FIT 21, where better than two-thirds majority were in support of this very policy. Finally, let's be clear. SOB 121 is bad policy that affects the entire banking system, not just one bank or one small group of banks. If the SEC wants to fix this problem themselves, they should rescind the bulletin for every bank in America that's publicly traded. One-off agreements do not fix underlying problems with this fatally flawed legislation. I urge my colleagues to support this measure, and with that, Mr. Chairman, I yield back.
Now, isn't that interesting? So, and I've always said this, I truly do believe Gary Gensler was only put in place largely to sort of stall the industry ready for his special interests, like Goldman Sachs, for example, that are now moving into the cryptocurrency sector. It's a huge endorsement of this industry that's not even been allowed to become an industry. You guys at the under end of the cameras get to be speculators on this space before it's even been allowed to become one, before it's even been allowed to grab hold of the world and ultimately revolutionize it, change it. And that's what this channel is all about, ladies and gentlemen, making sure you guys don't miss out on what is an amazing opportunity. Let's dive over to the House's actual vote on this. So the House vote to override President Biden's veto. He also mentioned Schumer. If anybody knows who Ben Schumer is, you'll know this guy is zealously against Bitcoin. And even he voted against that. Let's dive over to this second clip. Then we're going to wrap things up, guys, because we are going on for a bit.
A message from the President of the United States.
Mr. Speaker,
Madam Secretary.
I am directed by the President of the United States to deliver to the House of Representatives a message in writing.
The gentleman from North Carolina is recognized.
The idea that Congress is going to wait because you have banks trying to get a special carve-out for themselves from Gary Gensler and the SEC, that's not sound public policy. And the idea that Congress is going to wait and pause on overriding the president's veto of really bad policy that harms consumers, just because we have a rumor that two people are talking or 10 people are talking, that's not the way a great state should do business. A great nation state, the best capital markets on the globe. We should not be doing business this way.
Pretty unbelievable, isn't it? There's no doubt. I mean, Gensler's a lot smarter than people make him out to be. This guy was literally teaching at one of the most prestigious universities in the world, a blockchain course. He knows what this industry is all about. He knows that the vast majority, just like the CFTC clarified yesterday, the CFTC chair says 70 to 80% of cryptocurrencies are non-securities. All Gensler's doing is stalling this industry before allowing the floodgates to open. And when he lets that happen, he's going to make sure that those international banking cartel banks are there with nets over there to catch all the fish that sort of come through. That's what this is all about, ladies and gentlemen. It's never been about protecting you guys. They allowed FTX to collapse. They allowed so much shenanigans. The only person that benefited from Luna was the SEC, that have been given something like a $2 or $3 billion payout as a result of it. Not the people harmed. They enabled Sam Bankman-Fried. It's just absolute scandal after scandal after scandal with these individuals, and they can't stop what's already been set in motion. So there was also Patrick Mahenry talking on Squawk Box. Hang in there, guys. Just something to love and leave you with is this is the others chart that I can see nearly 10xing. This is everything outside of the top 10. This very much aligns with Total 2, which we can see going to 3. Still see it going to $3.8 trillion. This very much aligns with the work that we've done on and how right we've been on Grayscale Digital Large Cap Fund, Bitwise's fund, and so on and so forth. Hang in there, guys. I don't want to go too technically. Bitcoin, I do believe, is essentially just in some sort of a broadening or a flag-like pattern. It's ultimately still on its way to 150K. You've got to be in it to win it, guys. You've got to be able to still big the volatility. When it comes to the altcoin market, nobody wants to deal with the downside, but everyone wants the upside. And you only get the upside from being able to deal with that sort of volatility that comes inherent to this market. And that is it from me, ladies and gentlemen. I want to know your thoughts in the comment section. If you've enjoyed the content, like is appreciated. So is a comment. We'll be back to normal towards the weekend. And on that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you all in the next.